There are two areas that we have aggressive positions in the U.S. One is biotech, as we said. That's had a big run. We're seeing animal spirits come into that sector, a half dozen multi-billion-dollar deals just in the last 2 months. The drug pipeline is now open, that the FDA has moved its focus from COVID back to regular drugs. And believe it or not, we have our third largest position, which has now moved up because it's doubled in the last month, is an auto parts supplier. And this is called Cooper Standard. This is based on the fact that auto chips, the supply chains are starting to ease up. We saw from all the chip makers, whether it was Taiwan Semiconductor, Qualcomm, NXPI, their consumer electronics businesses were down, their handsets business were down. But what was up? Auto chips and industrial. So those chips are getting to the OEMs, the GMs, the Fords, and all these auto suppliers that have huge operating leverage that have been left for dead are now getting bid because as the OEMs get chips, they need the parts from the suppliers. The suppliers have huge operating leverage, and that's why you're seeing some of these things rip off the bottom. I think that trend is going to persist for the next 6 to 18 months. There's 2 years of backlog for new cars. Dealer inventories are at multi-decade lows, so there's a lot of room to run moving forward on that side. As far as the emerging markets, we still like some opportunities in China looking out 1 to 2 years, and we have a reasonably sized heavyweight in Alibaba still, which is unpopular. But that's our knitting. That's why we were in the trenches when biotech was in the hole. That's why we were in the trenches when the auto suppliers were in the hole. And same thing with China. We think that will be an opportunity. But you got to just get through the short-term overhang and the short-term headline noise.
Even though they've handed their code to the regulator, the cyberspace regulator, Alibaba that is?
Look, I think it's a miracle that they were flat year on year. If you look, with the shutdowns, with the regulatory crackdown, it shows the strength of the business. Even if you look, everyone's down on China. Look at the money supply growth last month, up 12% year on year. You know, that's the biggest increase in money supply growth since 2016. So, yeah, we got 2 rate cuts and we got $59.3 billion of liquidity yesterday, and everyone was excited about that. There's been so much stimulus and accommodation pumped into the system since November. It has not yet been felt in the economy because you had the shutdowns from in April, May, and regional shutdowns, and consumer confidence is low because they never know when another shutdown is coming with zero COVID. But the supply is in there, and as things normalize, and they will, I don't know if it's 2 months from now or 15 months from now, but you're buying, if someone asked you, Tanvir, if you could buy Amazon at a 66% discount with the AWS growth curve just beginning, would you be interested? And we believe that's the opportunity with Alibaba, and we're willing to weather. The most important organ in investing is not the head, it's the stomach. And sometimes you got to sit through the short-term volatility for the long-term reward.